By the year 2026, the dream of a secure home began to fracture. It didn't happen with a crash, but with a quiet letter. Across the globe, the safety net we took for granted for a century is simply vanishing. Insurance, the foundation of modern property ownership, is in full-scale retreat, leaving millions of homeowners stranded. Families wake up to find that their largest asset is no longer protected against the changing climate. The risks are no longer theoretical. They are physical, atmospheric, and increasingly unstoppable. The world is entering a new era. Welcome to the insurance desert. It begins with the elements. Nature is rewriting the maps of risk at a pace the industry can't follow. Rising sea levels and intensified storm surges have turned coastal paradises into liabilities. Inland, the story is no better. Flash floods now strike areas that hadn't seen water in a century. The aftermath of these events is a landscape of blue tarps, a temporary fix for a permanent problem. Satellites track the shifting patterns, showing us a planet in turmoil. The data is clear, but the solutions are not. As the physical world breaks, the economic world reacts. Actuaries are looking at these models and walking away. Premiums are skyrocketing. For many, the cost of insurance now exceeds the cost of their mortgage. This is the economic desert, a place where property has value, but no security. From California to the coast of Vietnam, the realization is setting in. We are on our own. Whole regions are becoming uninsurable. When the insurance leaves, the banks follow. Without insurance, you can't get a mortgage. Without a mortgage, the market collapses. The result is a forced migration. People are leaving the places they love, not because they want to, but because they have to. The safety net that once held middle-class life together is fraying at the edges. We are witnessing the end of an era of certainty. The new reality is isolation. The storm is brewing, and the protection we once relied on is gone. We must find a new way to live. The insurance desert, coming to a neighborhood near you. By the year 2026, our world operates on a hidden logic. Beyond the concrete and glass of our cities lies an invisible grid of security. Every home, every office, and every dream is built upon a foundation we rarely see, yet we depend on it for everything. This is the world of insurance. It is the silent partner in the global economy, the unseen force that makes modern life possible. But what happens when that foundation begins to shift? When the grid that protects us starts to flicker? To understand the present, we must look at the mechanics of stability. Behind the scenes, underwriters calculate the future. They weigh the probability of fire, flood, and storm, turning chaos into manageable data points. Capital flows through this system like lifeblood, moving from individual policyholders to global reinsurers in a vast, interconnected web. But the climate is changing, and with it, the math of survival. The cracks in the foundation are becoming visible. In some regions, the risk has become too great. What was once certain is now precarious. When insurance retreats, the economic ripple effect is immediate. A denied policy means a loan that never happens. Neighborhoods once vibrant are labeled uninsurable. The digital glow of protection fades into cold, red zones of risk. This creates a chain reaction. A failed mortgage leads to a dormant construction site and a community in limbo. For the homeowner, it is more than just economics. It is the loss of security, the fear of an uncertain future. Property values plummet where risk cannot be hedged. The wealth of generations can vanish in a single season of instability. We are at a crossroads. We can either reinforce this invisible grid or watch as the social contract unravels. The financial systems of 2026 are a complex web of light, but light can flicker when the foundation is weak. The future of risk requires a new blueprint. We must rethink how we pool our resources to weather the coming storms, because in the end, we are all part of the same network. A single home's stability is the world's stability. The grid may be invisible, but its strength determines our survival. It is time to make the foundation solid once again. By 2026, the global landscape has fundamentally shifted. Beyond the changing weather, a new crisis is quietly unfolding, the escalating struggle to protect our homes. For many, the first sign isn't a storm on the horizon, but a notification on a screen. Insurance premiums are no longer just bills, they are warnings. In the American West and Southern Europe, the beauty of the pine forests now carries a heavy price. The scars of past wildfires linger near untouched homes. Climate risk is rewriting the map. Regions once considered paradise are being reclassified as high-risk zones, making traditional safety nets a thing of the past. On the coastlines, the threat is more visceral. High-tide flooding has become a regular visitor, lapping at the doorsteps of modern beachfront properties. These aren't just natural disasters, they are economic breaking points. When the water rises, the value of the land begins to sink. In our cities, the danger is often invisible. Extreme heat waves are straining infrastructure to its limits, creating a silent surge in urban vulnerability. The physical toll is everywhere. Boarded windows and stripped roofs tell the story of a battle against nature that is becoming impossible to fund. Homeowners look at the watermarks on their walls and then at their tablets, realizing the cost of staying is becoming higher than the cost of leaving. Behind the scenes, algorithms are deciding the future of entire neighborhoods. Risk dashboards track flood probabilities and storm paths with cold digital precision. The insurance map is changing. One by one, providers are pulling out, leaving behind vast gray zones where homes are now effectively uninsurable. This crisis knows no borders. From coastal luxury to rural heartlands, the emotional tension of uncertainty is a shared burden for homeowners everywhere. On porch corners and in community halls, the conversation has changed. Neighbors no longer talk about the weather, they talk about the cost of survival. We are entering a new reality. The places we call home are beautiful, but they are also increasingly fragile in the face of a changing climate. As the sun sets on the old era of protection, we must ask ourselves, what does home mean when we can no longer afford to defend it? It arrives without fanfare, buried beneath the mundane clutter of daily mail, a single envelope that carries the weight of a lifetime. For many, this is the moment the world shifts, not with a bang, but with the tearing of paper. Meet David, a father, a provider, who has spent 20 years building a sanctuary for his family. But the numbers on this renewal notice don't care about history. They speak only of a crisis that is pricing people out of their own lives. Across the neighborhood, the view is changing. The American dream is being reconsidered, one rooftop at a time. Where there used to be stability, there are now signs of departure. The insurance crisis is a slow-moving storm, displacing families before the clouds even gather. For Margaret, her home is more than an asset. It is her memory, her legacy, and her greatest source of fear. She watches the horizon, knowing that a single policy hike could end a half-century of belonging. The weight is physical. It lives in the tension of a gripped hand, the silence of a house that feels less like a fortress every day. The ripple effect doesn't stop at homeowners. It trickles down, catching the next generation in a web of rising costs they cannot control. A text message arrives. Rent is going up again. Not because of luxury, but because of the cost of protection. In every corner of the country, the sky seems to be darkening. We are waiting for the next disaster, but the disaster has already arrived. It is a disaster of spreadsheets and premiums, a crisis of the middle class, hidden behind closed doors and quiet conversations. The stress manifests in the small things, the rubbing of temples, the long stares into the middle distance, the calculation of what to give up. How do you choose between the roof over your head and the food on your table? This is the math of the insurance crisis. As the sun sets, the vulnerability becomes visible. We are all small against the vast, shifting landscape of global economics. The camera pulls back, showing how fragile these sanctuaries really are. A world built on a foundation that is slowly being pulled away. The letters will keep coming. The costs will keep rising. And the human toll will continue to be paid in silence. Because when you can no longer afford to protect what you love, what is left? By the year 2026, the foundation of the modern housing market began to crack. Not from a lack of buyers, but from an invisible, systemic withdrawal. What was once a routine administrative task, insuring a home, has become a luxury. For many, the dream of security is meeting a cold, hard denied. Every second that passes without coverage, the risk deepens. It is a ticking clock integrated into the very architecture of our communities, counting down to a crisis. The tremors of this shift are felt first in the towers of high finance. Banks and mortgage lenders are the gatekeepers, and they are locking the doors. Without insurance, a mortgage becomes a liability too great to bear. In dimly lit offices, families are realizing that their collateral has become uninsurable and unloanable. The data is startling. As premium spikes surge across the map, loan rejections follow in lockstep, creating a ghost market where nobody can buy and nobody can sell. Signs of the freeze are everywhere. Real estate markets that were once vibrant now stand silent as property values begin a slow, agonizing descent into uncertainty. Real estate agents, once the heralds of growth, now navigate empty hallways, staring at tablets that tell a story of evaporating equity and vanished interest. The contrast is jarring. Bold architectural renderings of future luxury developments stand in stark contrast to the reality of stalled construction and abandoned sites. This isn't just a financial abstraction. It is a physical reality. When homes cannot be insured, repairs are abandoned, leaving neighborhoods vulnerable to the elements. Tools are left to rust on porches. As homeowners lose the incentive to invest in property they may never be able to sell or protect again. The social fabric begins to fray. Community gardens, once symbols of local pride, are overtaken by weeds as residents focus on survival rather than beautification. Bureaucracy moves slowly, but the crisis moves fast. Local governments struggle to respond to a disaster that leaves no physical debris, only financial ruin. As the economic fallout deepens, the very lifeblood of the community, local businesses and shared spaces, begins to vanish, leaving behind a hollowed-out landscape. The missing revenue from property taxes creates a thermal map of economic decay. Where wealth once glowed, we now see the spreading cold of a systemic collapse. The people affected aren't just statistics. They are the displaced residents of a new era, forced to abandon the places they called home as the safety nets dissolved. As we move further into 2026, we are forced to confront a new economic reality. The landscape has changed, and the retreat from the edge is only beginning. This is the systemic fallout of a world without insurance, a world where the foundation of the home is no longer built on stone, but on risk. Welcome to the edge of the inhabitable world. Here, the ocean isn't just a view, it is a liability. In these sun-drenched paradises, a new silence is growing. Markets are retreating faster than the tide. This isn't just a change in weather. It is the birth of the insurance desert, places where risk has outpaced profit. Behind closed doors, the poetry of our landscapes is reduced to the cold, hard mathematics of probability. Actuaries track the heat and the rising water, mapping out the zones where the math simply no longer adds up. They aren't looking at homes or memories. They are looking at financial spreadsheets in a warming world. To stay, we must build. We are hardening our world against an increasingly hostile sky. In laboratories, engineers test the limits of stone and steel, racing to outpace the next catastrophic wildfire. The cost of survival is skyrocketing. We are turning our cities into fortresses against the elements. For those left in the red zones, the math feels like a betrayal. Communities are demanding answers from those in power. Governments are caught in the crossfire between the physical reality of risk and the social necessity of protection. Who pays when the ground beneath us becomes too expensive to protect? The moral hazard is becoming a financial crisis. Resilience is becoming the ultimate luxury. A divide is forming between those who can afford to adapt and those left behind. While some find safety, their neighbors remain vulnerable, living on the front lines of an uninsurable future. The future is a precarious balance. We are adapting, but the frontier is shifting beneath our feet every single day. The insurance desert is expanding. The question is no longer if we can live here, but if we can afford to. For generations, the home has stood as the ultimate symbol of security. It was the one place where the chaos of the world couldn't reach you. We look to the horizon and see the darkening skies, yet we rarely consider the invisible safety net that has always hovered just above our heads. This is the story of a disappearing protection. This is the moment when the promise of covered finally meets the reality of an unpredictable world. The ground beneath us is shifting. The weather patterns we once understood have transformed into forces that no mathematical model can fully contain anymore. Where there was once greenery, there are now the charred remains of memories. The aftermath of disaster leaves a silence that is louder than the storm. And in the wake of this destruction, the documents that once provided peace of mind are being rewritten. Or worse, they are being taken away entirely. Premiums are climbing at a rate that defies logic. Coverage areas are shrinking, leaving millions of homes standing alone against the rising tide of risk. For the people inside these homes, the crisis isn't just a number on a graph. It is a slow-motion realization that the safety net is gone. They stand at their windows, looking out at a horizon that feels less familiar every day. The financial pressure is a heavy, invisible weight in the room. The dread is quiet. It doesn't scream. It whispers in the form of letters in the mail and the impossible choice between food and a premium. This is not a local problem. Across continents, entire zones are being marked as uninsurable, creating a new map of global vulnerability and financial displacement. Construction projects sit abandoned, their skeletons rusting in the rain. For sale signs remain in front of houses for months, then years, as buyers vanish. The ripples are moving through the economy, touching everything from real estate to banking. The foundation of the global housing market is beginning to crack. We are witnessing a quiet collapse. It isn't a sudden explosion, but a gradual fading away of the structures that once made life feel predictable. As the lights go out, we are left to wonder about the future. What happens when the world becomes too risky to protect? What happens to us? Will the next housing crisis begin not with a market crash, but with the quiet collapse of protection itself? The answer may already be here.